This is Agriculture Today, and I'm Shelby Varner with the K-State Radio Network. Dan O'Brien, K-State grain economist, and Guy Allen, senior economist at the IGP Institute, begin today's show with two segments as they discuss the domestic and international grain markets following the WASDE Report. Dan gives an overview of changes in USDA balance sheets, while Guy discusses the movement in the U.S. dollar. The pair also talk about the markets for wheat, corn, and soybeans. K-State meteorologist Chip Redmond ends the show with a weather update. He says how the recent weather has reduced soil moisture and if we can be expecting any precipitation looking forward. That and more is coming up ahead on Agriculture Today. You're tuned in to Agriculture Today, and we start our Friday show looking at the domestic and international grain market as the WASDE Report has recently come out, and we take a look at this with K-State grain economist Dan O'Brien and the senior economist at the IGP Institute at K-State, Guy Allen. Dan, Guy, thank you both so much for taking the time to join us today.
Thank you very much, Shelby.
Dan, can you begin with just giving us a large overview of what we saw in this report when it comes to USDA balance sheets?
From the USDA numbers, the grain markets have taken a look at the results. And for prices, we just had a December contract up about a penny or two. For corn, for soybeans up about 10 or so. And hard red winter wheat down about 2, so really not much change. And when you look at the broad overview of what occurred in terms of the production numbers, the most awaited numbers in this report had to do with U.S. corn and soybean production. So the trade ended up through a combination of a little bit higher yields, mainly for corn, raised U.S. corn production, the U.S. corn production figure up to 15.156 billion. So up really 39 million bushels, yes, a lot of bushels, but in the bigger picture, not that much, just a slight increase. Sorghum production, 302 million bushels, up 23 million, a little bit lower, down 3 million bushels for soybeans. Still 4.586 billion, up 400 some from a year ago in 2023. And small change in cotton, lower, sugar, a little bit lower. When they looked at the usage side for domestic consumption, not a lot of change really at all. If rice, we don't grow a lot of rice in Kansas in almost any year. We don't have the moisture for it, but a little bit lower domestic consumption there, a little bit, just slightly higher for soybeans. So when you see that, it's telling you that, gosh, the supply-demand balance sheets are going to wait another month or two till they get more surety from the October 1st, the November 1st crop production reports, and then if we do any adjustments on the usage side domestically, then we'll see changes on the use side of the balance sheets. And for prices, not a lot of change. Really, corn down a dime, down to 410 in terms of the production. That's down from 465 last year to get indicative of a pretty strong crop. And then you've got things happening on the livestock side, but really almost no change. I think grain sorghum was also down a dime, down to about 420 also, so no big change. And then for exports, saw almost no changes in the 23-24 marketing year. You did see corn, by the time they closed out that marketing year, ending August 31st, raised that 40 million bushels for corn exports up to 2.29 billion. So that's a positive. Looking out to next year, there's some changes that happened in meat exports, actually increased a bit, and for pork and beef, broilers down a little bit, turkey up slightly, total meat up a bit. And then looking out to next year, a little bit more pessimism on grain sorghum. Not pessimism, optimism. They raised that from 195 million up to 220, so that's positive for the grain sorghum outlook. And then cotton down a little bit. But a lot of what's happening on the export side has to do with foreign exchange. And Guy, I'll turn that over to you.
Yeah, thanks, Dan. Yeah, before we dive into the commodity complexes, we've seen a bit of volatility in the dollar since last month. We've traded that index down to 100.5 and as high as 101.9. We had a very volatile day today, but that change in the FX doesn't seem to be directly impacting commodity prices quite as quickly or immediately as it usually does. We are awaiting the Fed's announcement here on what they're going to do with interest rates. That's going to be interesting. I think I'd say unchanged to down a quarter. I think the mortgage market seems to be pricing in a 0.5% move on that. Moving over to freight, a number of things in logistics. The dry bulk freight index has stayed pretty steady for the last month. It's just under that 2,000 mark. Not a lot of changes on that. Where we are seeing some logistical issues there in the Red Sea, the Houthi situation, the disruption of trade through there has sort of escalated a little bit in the last couple of weeks. More closer to home, we're looking at Mississippi River. Lower Miss is running a bit low. They reduced the drafts from 10 feet to 9.5. That reduces capacity. We have seen this hurricane come across, which should recharge that lower Mississippi a bit. But not a lot of water going into that Ohio, which provides over 3/4 of the water to that lower Mississippi. So it could be a problem as we go into those winter months. So we continue to keep an eye on that. Rail situation quite dynamic as this border situation with Mexico continues to strand cars south of the border. I know both the Burlington Northern, the BNSF, and the UP have a significant volume of their grain cars stuck south of that border. And the combination of the higher barge freight and rail car freights trading up above $1,500 premium for the cars, it's going to make for a very cheap basis value for cash grain delivered to this elevator during harvest and put a good cash carry in that market to carry that grain at least into the new year till they sort out some of this logistical situation.
And taking a bit of a deeper dive into some of our crops, first wanting to start off with what we're seeing in wheat.
No changes at all in the U.S. wheat balance sheet here in the September report. Now, there's a annual small grains production summary report coming out on September 30th. So it seems that the USDA probably wisely stood back and decided that until we solidify, have more solid output numbers, production numbers, we're going to leave almost everything unchanged, really, on the wheat balance sheets. So not a lot happening domestically, but still a fair amount. Fears, trepidation, exhilaration, whatever happening on the international side. Guy, you want to mention some things on that?
Yeah, a few changes in the minutia, country by country. Keep in mind, world wheat production this year, it was lowered 1.4 million metric tons to 796.9 million metric tons. And however, that's still up 1% from last year's number, and that is a record wheat crop. So there's a lot of wheat around internationally from a production point of view. Demand's been slow, but still near a record on the consumption. Looking at a few countries, Australia increased their production by 2 million metric tons. It's up to 32 million metric tons and increased exports by a similar amount, up to 25 million metric tons. Keep in mind they're geographically located quite close to those high-valued markets in China, Southeast Asia. Canadian production was left unchanged from last month at 35 million metric tons. USDA increased their exports by 1 million to 26. Ukraine and Russia moving there to the Black Sea situation. Ukraine production at 22.3 million metric tons, up 700,000 from last month, but down 700,000 from last year's production of 23. Russian production and export forecast unchanged this month at 40 million metric tons. Exports will be down 7.5 million tons compared to a year ago. Combined exports from Russia and the Ukraine are expected to decline by 11.1 million metric tons. So a little bit less wheat coming out of that region. The EU decreased 4 million metric tons in their production to 124, with exports down 2.5 million to 31.5 as they continue to be competitive in that export market. Argentina unchanged. China, one of the top 2-3 importers. Estimates are, and the second largest wheat producer at 140 million metric tons. Imports steady at 12. From last month, that's 1.6 million less than last year's imports, so being tempered there a bit. That's bringing world ending stocks down to 257 million metric tons, about 600,000 metric tons higher than August. Ending stocks to use pegged at 32% compared to 31.9% or 33.2% last year. So we're quite comfortable in that wheat, although it's tightening up. And I didn't run the world less China on that. Dan, do you happen to have that in front of you for the wheat?
I don't have the percent stocks to use, but just slightly higher ending stocks from 122.72 up 0.6 million metric tons, but still higher domestic total usage. So still running a situation with that situation guy where we're looking at pretty tight domestic stocks. I would say here on Wednesday, the 18th of this month, our colleague Antonina Braiaca is having a Russia-Ukraine region supply-demand discussion. And Guy, I don't know what you've heard, but what you have seen in the news, et cetera, but even these numbers that are stated particularly with regard to Russia, are still under uncertainty. They're debating back and forth just how much they are going to be able to produce. They've had some dry conditions, et cetera. Yeah. So I think Antonina will no doubt address that all that much more completely. And of course, since that's the key supply center for the world anymore, that's cheap prices, well positioned in terms of where the buying markets are. That part of the world's pretty big with regard to wheat. And of course, we've got wheat from Europe, Eastern Europe, other places coming into the U.S., and it causes a lot of concern.
Yeah, just a comment and a segue into the corn situation. One thing for both Russia and particularly the Ukraine, next year's production, I think, is shifting away from corn with a high dollar value and cost of inputs, away from corn production into more wheat and soybeans, where you have lower cost and volume of inputs on that. And I think that we're seeing that shift away from corn exports and into to more of the wheat and oilseeds there.
We're cutting to a short break now on Agriculture Today, but when we come back, we'll once again be joined by Guy and Dan, and we'll continue our conversation. You're tuned in to Agriculture Today, and we continue our show with K-State grain economist Dan O'Brien and the senior economist at the IGP Institute, Guy Allen. Dan, Guy, as we continue our domestic and international conversation on the grain market, wanting to pick up this second segment talking about corn.
Yeah, I'll start off and talk about the domestic aspect of things. So again, heavily watched for number in terms of U.S. corn yields, and almost again with the same issue that happened in the September report. We had pretty strong yields, but it was what happened in the old crop usage side on the supply demand balance sheet that was a surprise to the market. So we ended up with a little higher. This is for the 23-24 market year that just ended August 31st, about 15 million bushels higher ethanol usage, 40 million bushels higher exports for corn, which is a strong finish. Total use up 55 million. Ending stocks, which had been ending stocks down 55, down to 1.812 billion. So old crop ending stocks then transferred over to new crop beginning stocks and affected that balance sheet. And to a degree, again, 55 million lower beginning stocks did offset the 35 million higher production number. So ended up that, again, the big issue that was watched this month, and I think will be watched in the October 11th and November crop reports and WASDE reports will be that corn production number, and all that much more. We get to October 1, we'll be all that much more into the fields and be able to be stronger on that. So ended up, and there were no other changes on usage estimates for the new crop 24-25 marketing year, which began September 1. So we ended up with the difference between the beginning stocks and the production numbers. Ended up with a little bit lower, just about 2.057 billion bushels ending stocks projected for that new crop marketing year. Stocks to use up to 13.7% from this year's 12.1, and prices about a dime lower at 4.10. So interesting to watch that. I would also just mention quickly on grain sorghum, not a lot of changes in the grain sorghum balance sheet other than, again, about 23 million bushels higher production and more optimism, Guy, really in grain sorghum exports. Now, there have been announcements between China and the U.S. on sorghum-related export goals, et cetera, and China's other actions with other countries, Canada in particular, on various crops. So in this case, expectations are that U.S. grain sorghum exports will increase, and that being the main thing that changed in those balance sheets, price also projected to be 410. So I'd throw it over to you with regard to the international side on the corn and feed grains.
Yeah, interesting. Just to comment on sorghum and barley there. I guess the underlying rumor in the industry is China looking at putting import tariffs on both those commodities, sorghum and barley, which would be similar to wheat and corn, which would be 65% when it's above the tariff-rated quota number, the TRQ number. But we'd like to think that wouldn't happen, but that would have a significant impact on that whole pricing structure and competitiveness. Looking at the coarse grains and corn situation, more particularly USDA this month, main changes they made were in non-U.S. corn production. They lowered it 2.2 million metric tons to 832.8. That's 1.8 less than last year, so a little less production on corn globally. Just going back to China a bit, import estimates for corn increased by 500,000 metric tons to 23.5. However, that's for this year we're just finishing up with some good demand in China. However, looking forward to this coming marketing year, imports are expected to be 2 million tons less, around 21 million metric tons. But China is talking like they don't need it. Sometimes they often do that before they step in and start buying. And we're in that time of the year now where we're starting to switch from that South American production to the U.S. Just going back to the Black Sea, which we mentioned on wheat, USDA did lower the Russian corn production slightly, 600,000 tons to 13.5. That's 3.1 million metric tons less than last year. And they correspondingly lowered their exports 400,000 tons to 3.8. Ukraine production mainly steady at 27.2. That's down 5.3 million metric tons from last year, and they're looking at 24 million metric tons of corn exports there. So that'll leave us at the end of the year with the world ending stocks for corn down 1.8 to 308.4 million metric tons. That's down 1.3 million from last year. So not a big change there on corn, but a few dynamics in the international situation.
So both the world stocks to use and the world minus China stocks to use for corn are tightening up a little bit. I would say that, again, by the time this information gets out, it's fine. But Guy and I were both looking at information earlier this week with regard to planting problems, dry conditions in South America. So I don't doubt we'll look at this information and that the bigger info probably in the next 30, 60 days maybe what's happening down there for planting progress. So we'll see where that goes on these major crops.
What are we seeing for things for soybeans, Dan?
I would say then for soybeans, on the U.S. soybean balance sheet, that minimal changes for old crop, just a little bit higher domestic usage, a little bit of a tightening of ending stocks by 5 million bushels down to 340 million. For new crop, again, large crop projected. Really the big issue for soybeans right now is that the projection of U.S. soybean production for 2024 at 4.586 billion bushels is up 421 million from the year that we just, from the previous marketing year, the 23 crop. So that just drives all the rest of these numbers. A little bit of change in the ending stocks down, that was projected from September down to 550 million, but that's, 340 million. 23-24 marketing year, 550 million. This one in the current one, and over 200 million higher. And season average price was 1250 last year, 1080 this year. I just would say when you gaze over at soybean oil and look where it's going, an increasing slice of soybean oil continues to go towards biofuels. And would say that's no small issue. And by the time we get what's happening in soybean complex on one hand, and also on the in the ethanol complex on the other, we have some exports happening on that. So it's not just entirely a domestic issue when we start looking at biofuels, particularly for corn, and to some degree probably on the soybean side. Turn the international side over to you, Guy, on the soybeans.
Not a lot to say on the oilseeds internationally. China imports were left unchanged. They take over 60% of the world trade in oilseeds, coming in at 109 million metric tons compared to last year at 111. Their crush is up at 103 compared to 99 last year. One thing I've been happy to see is China started coming into the market, and U.S. soybeans are now competitive with Brazil. We're starting to see some buying activity there for this coming season as those logistics start to switch. Looking at South American production, it was basically left unchanged at 169 million metric tons. But look, that's 16 million metric tons above last year. Brazil was at 51, down a little bit because of the dry weather, and Argentina was up a bit. Exports, we're looking at unchanged for Argentina, 4.5 million metric tons. Brazil at 105 million metric tons, and an increase in Paraguay at 7.3 million metric tons. So that's sort of where we're sitting in that South America or that global oilseed complex.
And if I could add one thing on that, dry planting weather causes delays for soybeans to be put in the ground. Doesn't mean they won't put them in eventually when they get moisture. When they do, then they still have that season. And then once soybeans come out, then if the crop's delayed, then it pushes that second corn crop later out into the summer months where it's more vulnerable to heat. So we're watching what's happening in South America.
Dan, wanting to make a quick mention also of what we're seeing for cotton.
Big issue on cotton is that prices are lower here domestically, projected in the 2023 marketing year, $76 per unit, and down $10 full per unit to 66 now. And so you have these issues, you have challenges happening in the U.S. market, and cotton's still a profitable crop in Kansas and the southern part of the state, but lower prices, no doubt, are a challenge for it.
And Guy, just for a little bit of fun when it comes to the market, what do we see for coffee?
Well, we've seen coffee in the last few months reach back up to close to historical highs as it's approaching $260. If we look back a year ago, it was down around $145. So here at IGP, I've been stocking up on my coffee inventories, and I've been telling all my friends here around the university, if you're a coffee drinker, go long coffee here a bit. It takes a while for those prices to precipitate back to the retail level, but look, it's happening already. So yeah, if you're a coffee drinker, you want to secure that supply before we see these prices go up significantly. That's on the back of dry weather in Brazil and South and Latin America. So it's not only soybeans we worry about, but coffee as well.
Guy, Dan, I appreciate you both taking the time to join us today.
Thank you very much, Shelby. We appreciate it.
That was K-State grain economist Dan O'Brien and the senior economist at the IGP Institute at K-State, Guy Allen. We're cutting to a short break now on Agriculture Today, but we'll be back with more ahead. You're tuned in to Agriculture Today, and we conclude our Friday show with a weather update with K-State meteorologist Chip Redmond. Chip, thanks for joining us today.
Yeah, thanks for having me.
What have we seen this past week for weather?
Well, some would call it beautiful weather. We've had a really dry air mass in place, and we have had copious sun. In the afternoons, we see things warm up really quickly. That dry air can warm up very efficiently. We've been about 5-6 degrees above normal every afternoon. But then at night, when we lose that solar radiation, our temperatures drop off real quick, and we get to about 5-6 degrees below normal for temperatures. So it's been a bit warmer than normal and colder than normal, but overall drier than normal. And probably most notably, we've been sandwiched between two pretty potent storm systems. We've had the hurricane Francine down in Louisiana. And then off to our west, we've had multiple systems impacting the northwestern United States. And that's kind of sandwiched us in the high pressure. And that's created a big enough pressure gradient that we're seeing breezy southeasterly winds every day. And with that dry air and gusts of 20, 25 miles an hour, it's been a rough recipe for overall conditions. So it has been pretty, but we're really drying out quickly. And I was just looking at some of the locations across the state, and down in southeast Kansas, they have now gone about 25 plus days without a wetting rain, at least a tenth of an inch. Most of the state has gone 2 weeks without a tenth of an inch. There was a rain event earlier in the week that we saw McPherson County get isolated areas of 1 to 2 inches of rain. But aside from that, it's been pretty darn dry for most of the state. So that beautiful weather unfortunately comes at a cost for some folks in ag.
Does that mean drought-monitored degradation around a lot of the state?
Yeah, we now have 95% of the state in D0, abnormally dry conditions, not considered a drought just yet, or worse conditions, with about 60% of the state in D1 or worse. We did see expansion in the southeast thanks to the really dry conditions. We did see some moderate, small areas of improvement in central Kansas where those heavier rainfall did occur last week.
Are we going to see any moisture, Chip?
That's the good question. I know a lot of folks looking to plant wheat and don't really want to plant into dry soil. Soil moisture's really been dropping over the last several weeks due to those conditions. I think so. Might be the best way. We're going to have multiple storm systems come in from the northwest and kind of a classic La Nina-like look, negative PDO type look to the weather pattern. But they're going to be pretty moisture starved by the time they get here. It does look like one of those systems, after about the third or fourth in the northwest, will eventually push a cold front into the central United States, maybe Sunday into Monday, and then kind of stall out, which may provide the focal point in central Kansas for a couple episodes of thunderstorms on a daily basis, Sunday through Wednesday to Thursday. But I think those thunderstorms will be pretty limited in coverage, and I don't expect widespread precipitation by any means. And we really need to watch the Gulf. That's where we need our moisture this time of year. We need that moisture to be transported northward, and it depends on where that front sets up. And if we get another hurricane to form, potentially in the southeast, that could help push that precipitation or that moisture from southward and keep it from getting into the central plains. So right now, I'm optimistic some folks will get some rain next week, but at this point, I'm not optimistic it's going to be a very good coverage.
What about for temperatures looking forward?
Temperatures are going to remain pretty consistent on the warm side during the days. We're going to stay a couple of degrees above normal. We're going to increase the moisture overall, though, in the air mass. And so that's going to help keep our low temperatures up from where they were. And we'll be above normal. I think we'll see lows in the 60s really through most of next week. And so warmer than normal temperatures, I think, will carry us through September for sure, and even into early October. I know some folks are thinking freeze, or at least frost as we start to get towards October. We start to see average first frost in the northern part of the state here towards the early part of October. Right now, I don't see a big signal of it. We need a dry air mass in place like we had, but we need a cold air mass too. And we just have not had real cold air building to our north and west. And as you look out further, there is some hope that with that ambient moisture around, that we will get maybe a bigger system come the end of September into early October. That might bring some more precipitation that'll help keep those temperatures up and keep the chance of freezing down, but that'll hopefully bring more needed moisture.
That was K-State meteorologist Chip Redmond. That's all we have for you this week on Agriculture Today, but we'll be back with more for you on Monday.